Hello everyone, my name is Blaine Pearson and I'm a graduate instructor in Texas Tech's Personal Financial Planning program. In this video, we're going to look at what to look for in evaluating a 529 plan account. When we review Section 529 plan accounts, there are really two major account types. There is the savings plan accounts, which, as the name implies, are accounts where individuals contribute cash into those accounts. That cash is then invested in investment portfolios that the client chooses. The other type of accounts are prepaid tuition plan accounts. With these type of accounts, parents purchase college credits today in today's dollars for future use. Now, with the prepaid tuition plan accounts, it does require that parents reside in the state in which the prepaid tuition plan will be implemented. The credits used to attend college must be used as part of the state university system. If they are not used to attend a public state university, those credits will not have the value that they would have if they were used for a state institution. There are no income tax consequences to parents for the difference between the current and future college costs. So with prepaid tuition plans, your quote-unquote rate of return is the difference that you will hedge for inflation. For the rest of this presentation, we will specifically focus on 529 plan savings accounts. Now, when we are selecting which state's 529 plan savings account we would like to use, there are a few questions we must ask. The first question is, are there any state income tax deductions available? In some states, when you make a contribution to a 529 plan savings account, you are allowed to deduct that contribution off on your state income tax return. The second question from that we need to ask is, does that really matter? Because in Texas, Nevada, Florida, and a few other states, there is no state income tax. So, if the majority of your income is earned in the state of Texas, for example, then having a 529 plan account from another state that allows for state income tax deduction doesn't really matter a whole lot. The next question we need to ask is, how expensive is the plan? We can look at the various enrollment fees, ongoing cost, and the biggest expense will be the internal fees charged by the mutual fund companies. Now, investment managers and mutual fund companies tend to like to get paid, and they tend to like to get paid very well. So it's important to understand how much the internal costs are for the various investment selections you have for your 529 plan savings account. The next question we need to ask is, does past performance matter? Simply, past performance does not indicate future performance. My answer is no, but in parentheses-ish. It can be a nice ancillary add-on to your client report, but it should not be the main focus or a driver in determining which state 529 plan option you should choose. The better question we need to look at is what investment options are actually available. Is there some kind of life cycle fund that will allow us to set our savings goal in autopilot? That is the most important question with respect to the different investment options. And of course, we want to make sure that the objectives of the client are aligned with which state 529 plan savings account we select. Again, this is Blaine Pearson, and in this video, we reviewed what to look for when evaluating a 529 plan account.